Hello. Good morning, everyone. I am Sharanya, the Vice President of the investment team here at the Emergent Fund. Today, I'm here to present to you and actually inaugurate our flagship initiative, which is called the India Web3 Landscape Report. We've been doing this since 2022 and are currently in the fourth year. And as is the nature of every year, we try and partner up with specific domain experts to bring to you insights on what major stakeholders of the Indian blockchain ecosystem are doing. So without further ado, I'll get started with the presentation. I know the markets have been rough over the past 2 months, but underneath all this chaos, we must remember that the Indian blockchain ecosystem is thriving. In fact, we've seen a plethora of startups build across various domains. Almost 1,250 startups have cumulatively raised about $3.5 billion worth of funding since the blockchain industry started in India. And this is across the spectrum, right? And we also include founders who are products of India in the sense that they might have been born and brought up in India, would have done their education here, but are currently based abroad for reasons such as superior market opportunity or legal structuring, etc. We'd seen this momentum sort of build last year, wherein 2023 was a year of lull, but 2024 saw, exuberance in terms of funding that happened, and 2025 has sort of built on that momentum. Indian founders have already raised about $653 million worth of capital in the first 10 months of 2025 itself. Versus 2024. And the key thing to keep in mind is that there has been a revival of the Series A plus deals, which was lacking from the Indian ecosystem over the last 2 to 3 years. And one important thing to note is that the financial sector, propelled by blockchain stablecoin adoption, has made a comeback and overtook the infrastructure sector in terms of its contribution to overall funding for the first time since 2021. Key prominent projects from India, of course, we all know about how Polygon and CoinDCX, CoinSwitch have been being the forebearers of the Indian flag when it comes to blockchain projects here. But we also see a new wave of strong startups building from the country, particularly on the cross-border side. So you have folks like Espora, OpenFX, and Transact that have really led the way this year. And in terms of key themes, we all know that AI has been the hot topic in general, not just in the Web 2 world, but also in Web 3 with the rise of AI agent-enabled wallets. Other major areas that have gained traction this year are RWAs and prediction markets that all of us must have been very familiar with. The investor base, again, very, very well spread out all over the world, but this is on a cumulative basis, and what this really doesn't say is that the Indian funding landscape is largely led by international funds, right? You have Paradigm make their first investment here. A16Z's first crypto investment in India was also in the blockchain space. But over the past 2 years, domestic investors have really lagged behind in terms of supporting the overall ecosystem. And ecosystem foundations, be it Coinbase, Aptos, Avalanche, have really stepped in to back Indian entrepreneurs with financial resources. And that is something that we as the Indian industry need to think about, need to ponder whether early stage financing is the kind of risk that we all want to take, and how VCs should sort of back Indian founders more so going forward. The next section is brought to you by CoinSwitch. This is regards to the retail behavior of India's centralized exchange users. One key thing is that because cryptocurrencies is in general a more riskier asset class, more early asset class, you have the youngest investors, which is basically Gen Z, really leading the charge when it comes to propelling this asset class forward. So crypto startups like blue chips really saw almost a 2x growth in volumes over the last year. This, of course, is attributable not just to asset prices increases, but also to a overall net increase in new traders that have come up. And while there are newer cities that are participating in this overall crypto adoption within the country, it's really the metros that are contributing about north of 60% of overall volumes in the country, with Delhi accounting for almost 1/5 of the overall AUM. But the beacon of hope is that the adoption is getting much more secular. Particularly, women traders have grown 2x across city tiers. That is very encouraging to see. And within crypto investors as well, this is not just a flight to only blue chips or towards meme coins, but it's more sort of a diversified basket of cryptocurrencies that the investors are holding. The next section is brought to you by Pi 42. It's a commentary on the state of crypto derivatives in the country, which is a relatively new instrument that Indian investors are sort of getting exposed to. There has been rampant growth throughout the usage of crypto derivatives. If you look at all regions across the country, they've almost doubled, if not more. But the key thing to note is that the eastern part of the country has grown 6x over the last year. And this is despite the fact that there are no major metros in this part of the nation. So that's, again, very interesting. No surprises on how the age distribution goes. Gen Z is again leading the charge, contributing to 61% of the overall new retail users on the crypto derivative side. And I think this is only going to continue, given that their investment horizons are longer and their risk appetite is also higher. While derivatives is, of course, a much more riskier instrument to sort of go with. In crypto, we have seen that the F&O traders are practicing risk management much more than they would do in equities. So 1 in every 4 crypto F&O trader has some sort of taking the profit strategy versus only 1 in 11 in the Web2 world. And because crypto is now becoming more and more mainstream, people are increasing their engagement as well as their exposure to the asset class. So trade sizes have almost doubled to $2,000 on the crypto derivative side. And you see a 33% increase in engagement with 60% of traders engaging on a daily basis, with 1 in every 8 women being crypto derivative traders as of now in the country. So that's a 20% increase from last year. So very, very good signs. What I do hope is that a lot of these numbers would have been supported by the overall macro increase in asset prices. We will wait to see if it's a similar story next year. This is a new section that we've added this year, which is particularly dedicated to Bitcoin. And this segment has been brought to you by JetKing. So again, Bitcoin, the value proposition is very well understood by Indians. We've been large consumers of gold ever since we can remember, right? Indian households command more gold than the next 7, 8 central banks put together. And that is no surprise, right? We contribute to almost 1/4 of the global gold demand. But what is the reason why Bitcoin has not been able to get the same kind of attention? And simple stats say that it's because of lack of awareness and lack of clear regulation, right? So on your left, you see that the Bitcoin interest peaked in 2021, and at the time, the average price for the year was about $30,000. And that has catered to half of that, even though Bitcoin has actually increased 3x in price on an average basis. So this really says that we all must, do our own bit to put forward the Bitcoin agenda amongst the Web2 retail investors, because this is here to stay, right? We've been seeing institutions really getting into this asset class. Harvard recently announced their Bitcoin investment from the endowment. So that is something that we do see improving as we go forward. And the next section that we've introduced this year as well is the segment on stablecoin adoption and on-chain metrics. So we all know that there's been a lot of activity with regards to stablecoin usage globally, particularly post-Trump's presidency. The US has recently passed 2 major acts, the Clarity and the Genius Act, that propels the adoption of stablecoins. And we do hope that recently Polygon also announced that they're going to be launching India's first stablecoin, and that really enables Indian users to access the blockchain economy. While India has ranked 1 in crypto adoption consistently over the past 3 years, this is on a PPP adjusted basis. So whenever it comes to purchasing power parity and Indian per capita basis, we typically do end up on the higher end of the charts. But even on an absolute basis, right, whether you look at on-chain value received or mobile wallet activity, Indians have done phenomenally well, right? Like India is the top 3 destination for mobile wallet usage, and that is something that is possible despite tremendous friction in the on-ramp, off-ramp capabilities within our country, right? So India should ideally look at having some sort of global framework and laws, like much of the developed world, to push this small ecosystem currently from the fringe to the mainstream. The government adoption has been robust, has been scaling well, wherein they've been actively advocating for the underlying tech, but not the cryptocurrency as an asset class. We see almost 7 states, 22 government departments that have done 352 million verifications using blockchain under the national blockchain framework. Some of the use cases they've been used to do this are for dispute resolution, for recording police complaints which cannot be tampered with, and are even testing this for election campaigns wherein you need strong authenticity to be established to ensure that results are not being tampered with. And the private enterprises are not far behind, right? So you have some of the biggest Indian industrial names who are adopting this technology for various purposes, be it supply chain traceability, settling insurance claims, and the likes. But one key thing missing here is that Indian tech startups, multiple $1 billion worth of valuation, but haven't really seen any sort of blockchain adoption. And that's something that I would really encourage them to do so, because globally, whether it's a Revolut or a PayPal, we are seeing so many fintechs adopt this technology. The next segment is brought to you by DevFolio, which is a partner to us for the past 3 years. No surprises here. India is definitely growing by leaps and bounds when it comes to young developers joining the blockchain stage. We account for 15% of the overall share of blockchain developers and are steadily reducing the gap with the US, which of course commands the first position. Having said that, the geographical locations of the developers is very much concentrated within urban centers where tech is really encouraged, and this could be a learning point for all the other tier 2 cities and other parts of the country to really improve their offering to attract this developer base, because this is a very productive workforce that will only be more useful as we go forward. We conducted a survey with DevFolio to really understand what is the demographic distribution of developers in India. And no surprises here again, a large part of them, almost 70%, belong to Gen Z. And what is noticeable is that out of these, at least 40% had work experience of 2+ years, given that crypto in itself is not more than 5-6 years in terms of actual developer engagement. It's a very encouraging sign, and as we move forward, this is only going to go from strength to strength. And the good thing is that the future looks even brighter. We have 47% who are actually students who ultimately will get into this workforce. So I would encourage all of these large sponsors here, large institutions within the Web3 space who are looking at making a footprint within India or abroad to definitely look at talent from the country. It's really, really top tier and is only going to go from strength to strength as we progress. The next, in terms of the blockchain wars that typically happen where blockchains compete for developer mindshare, we have EVM-compatible chains dominate the overall spectrum. Of course, Ethereum and Solana being the top 2, but Base has made huge strides, particularly over the last year and a half. And Polygon, this is India's Polygon's bastion. Having said that, Aptos, Avalanche, Sui, etc., have also done a lot of activations to make sure that it is a competitive market, and we already know of more chains planning to target this region to get access to the developers. One key thing which is very important and is a priority for developers is the kind of documentation. So the clarity of documentation, the dedicated resources that an ecosystem has towards developers in India is key to ensuring adoption here. So any new ecosystem looking to enter India, please do have your docs in place. We have dedicated resources for the country. That's very useful. Solidity leads again in terms of the overall market share. However, problems continue to persist, right? Who would have thought that the biggest challenge facing Indian developers today is lack of mentorship, and that is a big problem here because we haven't been able to get good quality developers from established enterprises to learn blockchain languages and or get international resources who can actually train Web3 developers to the country. And I think that is a big white space that needs to be filled. In terms of sectors, a lot of the building in India is typically focused on the middleware / DeFi side. With the advent of stablecoins, the DeFi sector anyway became most popular, commanding for almost 50% of the overall share. And yeah, I mean, we've been seeing the Cardano hackathon happen here at the start of the conference, and hackathons contribute to the largest onboarding exercise when it comes to growing the pie for blockchain ecosystem. Coming to the last segment, this is brought to you in partnership with TriLegal, again a top-tier firm that has been pushing the blockchain agenda forward. So the way it stands today is that crypto is the government is treating crypto as in a pessimistic way, wherein they're cautious about the underlying tech and overtly pessimistic about the negative effects of Bitcoin or of blockchain. And therefore, you don't have a clear regulator governing the technology because the RBI categorically said it's not currency, and the SEBI said it's not a security. So there's this, white space that nobody's able to sort of fill in, and people are looking for direction, right? Institutions do not want to not comply with the law, but the law should exist in the first place for this technology to really come up. We had seen the Supreme Court overturn the RBI ban on cryptocurrencies initially, but since then we haven't seen a lot of developments in terms of concrete frameworks come about, and that is something that is holding this industry back. And it's a firm appeal to the regulators, to the government, to actually come up with this regulation or a law so that all of us can comply with this and not be treated subtly as criminals, right? Like, that's not what we do. They have sort of discouraged the use of this technology. If you have a 1% TDS tax and a 30% tax on gains that cannot be offset, you have basically crowded out most of the users who would use this technology, even for the infrastructure purposes and not investment purposes. So that is something that is the current state. Having said that, we have heard positive remarks from the government, including from the finance minister, where they talk about a globally coordinated effort to sort of propel this industry forward. We are seeing major economies, be it the US, be it Japan, come up with not just frameworks, but actual laws to propel this industry forward. And our appeal to the government would also be to follow a similar trajectory. Yeah, and that's the last slide of my slide. I'd like to thank all of our knowledge partners who have sort of helped us come up with this insight. We'll be launching the full report end of February, so please do keep a lookout for this. And yeah, maybe we'll just take a moment after this to call all our partners on stage and inaugurate the report. So would request you to bear with us for a couple of minutes. May I please have Avinash from Pi42, Siddharth from JetKing, Sadik from the Growth Protocol, Lakshaya from TriLegal, Atul from CoinSwitch, and I don't know if Denver is here from DevFolio, to please join me on stage to inaugurate the report. And yeah, Nishta and Onkar, could you please help us with the NVIDIA? So we'll all just untie the ribbon together. In 3, 2, 1, go. Thank you, everybody. Thank you for your time. Thank you.